Good morning, ladies and gentlemen. I'm Kritika, moderator for the conference call. We welcome you all to Q3FY22 conference call of Subros Limited, hosted by Aditya Birla Money. As a reminder, all participants will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your phone. Please note that this conference is recorded. I would now like to hand over the floor to Mr. Vidrum Mehta of Aditya Birla Money. Thank you, and over to you, sir.
Thank you, and good morning, everyone. On behalf of Aditya Birla Money, we welcome you all to Q3 FY22 earnings conference call of Subros. From the management side, we have Mr. Pramod Kumar Duggal, CEO, Mr. Hemant Kumar Agrawal, CFO and VP Finance. Before we start, may I remind you of Safe Harbor? There may be some forward-looking statements that have to be understood in conjunction with the uncertainty and the risk that the company faces. Now I'll hand over the call to the management for opening remarks, followed by interactive Q&A session. Thank you, and over to you, team.
Good morning, ladies and gentlemen. My name is P.K. Duggal. A warm welcome to all of you for Subros investor call for quarter 3 FY21-22. First of all, let me wish you all a very healthy, happy and prosperous New Year 2022. And I hope that you and your families are healthy and safe during this testing time. We entered into the new year with a very positive note, but very early week of January, we saw a steep rise in COVID cases due to wave 3 and Omicron impact. But luckily this time, the impact is not very fatal as compared to wave 2. A moderate impact or very low impact on our workforce, but everything is safe and secure. It is fair to say that this has been a challenging quarter for us, having seen a solid recovery through the pandemic and coming out of the pandemic in last quarter. But shortage of semiconductor has impacted the industry, and noise of third wave in India is also creating disruption. Apart from this, there are many other challenges in supply chain disruption due to high commodity prices, big increase in container costs, rising diesel prices, increased packing and other operational costs, which has a big impact on our financials, especially on material sales ratio and EBITDA margin. The result of quarter 3 2022 has been shared with the stock exchanges and also posted on our website. So let me elaborate the summary of the result one by one. First, I'll update about the industry which is relevant for our business. In this quarter, passenger vehicle industry has shown degrowth of 12% on production basis in comparison with corresponding quarter of last year. However, on 9-month YTD, PV industry has registered a growth of 28%. Whereas in Subros PV segment, thermal product growth in quarter 3 is minus 11% in comparison of corresponding quarter of last year. However, it has grown by 35% on 9-month YTD basis. So we have done better than the industry performance due to model mix and impact of incremental business from Mahindra XUV 700, which is doing well in the market. Commercial vehicle bus segment has registered 62% growth on YTD December 21 basis, whereas Subros growth in this segment is 50% as compared to 9 months of December 20. Though the tourism and school bus business and public transport is not still revived, but ambulance sales are still happening to fill up the deficit, and also each government is improving their medical infrastructure to deal with emerging situation of COVID-19 in future. Further, on commercial vehicle truck segment N2 and N3 categories, which is relevant for AC or blower industry for us, this has also started showing upside trends. The industry has grown by 71% in 9 months, and Subros has grown by 70% in this segment on YTD basis. So growth is mainly because of AC fitment ratio has improved and consumer preference also shifting towards AC truck as compared to normal truck. After extended lockdown, in view of opening marketplaces in various parts of the country, impacting home appliance sales, this sector is showing promising growth now. In this quarter, home AC air con sale has grown by 2% as compared to the corresponding quarter of last year and 120% in comparison of the last 9 months versus current year 9 months. Total sale in this segment is 66 crore. Revenue from operation has recorded 547 crore in this quarter. Corresponding quarter, it was 603 crore. Overall, 9% degrowth over the last year, but 3% growth over the previous quarter, that is quarter 2 of this year. So overall, in 9 months, there is 37% growth as compared to last year in our company's revenue. Let me explain each segment-wise contribution to sale during this quarter. In this quarter, car and non-car segment contributed 90% and 10% respectively. Maruti Suzuki and Suzuki Gujarat has contributed around 84% of the total sale in this quarter. Home AC has contributed 25 crore in this quarter, which is approximately 5% of the total revenue. And our share of business in passenger vehicle industry has moved to 40%, mainly because our largest share also dropped the share of business in the market. Now I'll talk about the operational performance. As I mentioned before, there is a lot of challenge in supply chain, which has never been experienced by any one of us. Commodity price increase, logistic cost escalation has impacted the margin in a big way. Significant increase in lead time of import shipment, subsequent reduction in schedule by OEMs due to semiconductor shortage has impacted overall inventory level, which has increased by almost 15% to 20% and blocking cash flows. Commodity price fluctuations are on upside in ranging between 30 to 40% in last 9 months, which has impacted significantly on the material sales ratio. Although there is a compensation formula with the major OEM, but it is on a quarter lag or a period lag. Further, on non-regular commodities, which are used by our sub-suppliers, there is a cost impact as well. We are in discussion with customer for compensation of such irregular commodities also. Container demand and supply imbalance causing steep price increase on import consignment, and diesel price and other packing cost increase also impacted the margins significantly. The company has realized EBITDA of 40 crores in this quarter 3 as against 37 crores of last quarter, which has 8% more in this quarter. If we compare EBITDA margin against quarter 2 of current year, it has improved by 8%. If we compare EBITDA margin of 9 months versus 9 months, it has improved by 11%. And if we compare EBITDA with the corresponding quarter of last year, it is down by 43%. Period profit before tax in quarter 3 is 11.56 crore, which is 2.12% of the net sale. If we compare PBT margin against the previous quarter, it has improved by 51%. If we compare PBT margin of 9 months versus 9 months, it has improved by 46%. Profit after tax in quarter 3 is 7.42 crores, which is 1.36% of the net revenue. So finally, the summary of financial result. Revenue of 547 crore in quarter 3, 1,565 crore in 9 months, and 9-month growth is 37%. EBITDA of 40 crores in quarter, 109 crore in 9 months, and 9-month growth in EBITDA is 11%. PBT in this quarter, 11.56 crore, 9 months, 24.20 crore, which is 46% higher in 9-month period. On the business side, quarter 4 looks better than quarter 3 as per the customer plan shared with us now. Semiconductor availability and other challenges are still ongoing, but there are certain adjustments in model projection, so that's how the impact is slightly lower. But still, this unclear visibility will remain for another 5 to 6 months time. Growth in this year is expected to be on increasing trend as compared to the last year. We'll watch the situation and keep ourselves agile to the situation. Still, we are expecting double-digit growth in this year as compared to the last year. On the new business and the product development area, there is a significant success in securing new business from our customer. Most of the customer, we have already finalized business up to 2025, and in this business negotiation, we have secured certain incremental business also. Business expansion in rail coach is also improving opportunity for us. As we reported to the exchange that we bagged a first coach AC business for Indian Railway. This is a start in this segment, and it is a promising segment for us. We'll see significant results in the future as well. Development activities on all new programs from all the customers are in progress, and it is as per the schedule. As we reported in the last calls that we secured business from Maruti Toyota Alliance project, for which assembly of car will happen in Toyota plant at Bangalore. We are preparing our Chennai plant to supply thermal products for this project. This will improve the utilization of Chennai plant also, and also add to the top line significantly. The SOP of this project is middle of next financial year. It is significant to mention that the start of production of new Baleno has started in January 22, though this is late by 2 months, but it is important business for us as the new wind rotary compressor is getting launched through this model. This is a first time launch in India, and we already start of production on 20th of January for this model. Also, heat exchanger manufacturing in Karsanpura plant, Gujarat is another key milestone which company has achieved by supplying heat exchanger locally manufactured in Gujarat for SMG project. Our development program for electric mobility is also ongoing, as we understand that public utility will be first aggressively pushed for electrification. So our products for bus aircon, railways are our first priority, and the products are at final stage of evaluation. That's it from my side. Thank you very much. Now we are ready to take questions.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask a question. If you would like to withdraw your request, you may do so by pressing star and 1 again. First question comes from Abhishek Jain from Dolat Capital. Please go ahead.
Good morning, sir, and thanks for the opportunity. Sir, why sales growth is lower than the PV's industry growth, as the Maruti sales growth was around 13% quarter-on-quarter basis, and your growth is just 3%. So is it because of the inventory liquidation, as that last quarter inventory was quite high? So what is the reason?
Yes, so what I count is on production basis growth, and what Maruti is showing is on the sales basis growth. That means the inventory liquidation has happened in this quarter. But for relevant for us is the production base, and on which we have shown our results.
So what is the current situation of the inventory now? Is it at a normal level or below normal?
Now it is getting normal level, but there will be some mismatch in by model because of semiconductor preferences. There are certain models where the production has smoothened now. So there will be some imbalance, but now inventory levels are getting stabilized now. So in this quarter, we may not see such a significant variation.
And as you mentioned that you own the new business for the Baleno, and is it for the compressor or HVAC supply?
So in Baleno, earlier Baleno, we were supplying HVAC and compressor. So in this new Baleno, we got compressor with the new technology. HVAC business remained with us. Heat exchanger business added to us.
So and is there any increase in the content per vehicles?
will increase by roughly 1,800 to 2,000 rupees per vehicle content will increase.
Okay, sir. And sir, on the margin side, we have seen a material sales ratio is on uptrend from last many quarters. So how much pass you have already done, and how much is still under recovery? And how is the outlook ahead?
As I mentioned that there is an overall impact of roughly 2% on material sales ratio if you compare on YTD basis, more than 2.8% or so. So majorly the contribution is on the quarter lag, because the prices are every quarter increasing in the range of 10 to 15%, and every time the next quarter recovery will offset the previous quarter impact, and again still something will remain. And also, as I mentioned, there are certain non-regular commodities for which the negotiation is on for first-time settlements. It is not part of our regular settlement formula. So that we have requested OEMs to settle in a different circumstances. So impact of total 2.8% is contributing because of these two, and also added by the logistic cost increase, which is almost 5 to 6 crore per quarter. There is a delta impact. So I think the situation will be eased out by June quarter. That means quarter one of next year. Hopefully, based on the assumption that the commodity prices will settle down now, and that the recovery system will offset the previous quarter impact. So that's our hope, and we need to wait for another 2 quarters.
So can we come back to that double-digit margin by the June quarter?
Oh, yes, that is what the intent is. We are not very happy with the EBITDA margin of 7%, 8%. It has to come back to 10 to 11%. That's where we are working aggressively on.
Okay. Sir, there are a couple of questions on other segment. There's a faster acceleration of the EVs in the bus segment. So have you started supplies in this segment, and just wanted to know content per vehicle on these buses?
So on bus AC, as I mentioned in my opening remarks, that product evaluation or final validation at OEM side is happening now, because still all OEMs are under process of finalizing the spec for EV buses aircon. So we are at the final stage of product evaluation and finalizing the specs. The moment that is confirmed, we will start rolling out our product, and hopefully in the first quarter of next financial year, we will see sales started happening in this domain. The content differential between a conventional aircon versus the EV aircon is almost 1.4x. So you will see 40% revenue, incremental revenue coming in as we move more into EV segment.
Okay. And sir, my last question is related with the railway coach. They have won the new business as well. So just wanted to understand what is the quantum of order, and what sort of the opportunity size you are looking from this business.
So in railway, as we reported, this was our first very long-awaited milestone that we need to get entry into rail coach aircon. So we were under a facility setup for past few years, and finally now it is at a final stage of RDSO approval. But as a development order, we got order worth rupees around 4.5 crore rupees in this segment. That is the first initial pilot lot. And after that, I think every year around 15 to 20 crores of coach aircon business, which is currently as on the current condition being tendered out by Indian Railway for train 18 for Rajdhani, new Rajdhanis, or also for metro coaches also will be the opportunity. So it's a very promising segment for us, and maybe long term, 3 to 5 years time, we'll see between 60 to 80 crores revenue coming in from coach aircon itself.
Thanks, sir. That's all from my side.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. Next question comes from Pramod from Incred Capital. Please go ahead.
Yeah, hi, sir. Wanted to check, did you apply for the PLI scheme we just got recently opened?
No, we have not applied for PLI scheme because our products not qualifying into PLI scheme. Only relevant product which was there was electric compressor, which qualify into PLI scheme, and still there was a very unclear situation of electrification for the long term, whereas the commitment of investment was 250 crores. So that was not making a viable sense of investing now and waiting for the revenue for long term. So that's why we had not applied for that.
And considering that it was also related to many of the EV related parts, does the air cooling system and all related to EVs which are developing, that also doesn't fall into the PLI?
For aircon system, is not much change in our existing product range. So very cosmetic change required for making these parts suitable for EV, other than the compressor change. So rest part for EV relevance, there is no change.
Okay, sure. Thanks and all the best.
Thank you, sir. Next question comes from Abhishek Jain from Dolat Capital.
Sir, my question is related with this home AC segment. You have done around 660 million revenue in this quarter, in last 9 months. So what is your target for FY22 and FY23?
So I think we discussed this subject before also. This year we are targeting between 130 to 140 crores coming in from this segment. And next year also we are targeting around 20% growth coming from this segment.
And you are facing a lot of the issues related with this on margin side. So because of the increase in the commodity inflation, and it's very tough to pass on in this segment. So just wanted to understand what is the outlook for the margin for the next 3 to 4 quarters in this segment.
So this industry, as you know, was very rigid in terms of price fluctuations. So first time we could negotiate with all our key customers for a back-to-back formula for all fluctuation on commodity side. So now all commodity fluctuations are settled on monthly or quarterly basis with variable customer contracts. So that is helping us to neutralize the inflation impact on our margins. So that's why we are able to keep the margins intact on that. But as you are rightly saying, that margin in RCCP means home aircon segment is not same as the PV segment. So that's why backward integration is the only solution to improve margins. So that's what we are now working on for next 2 to 3 years time. We are looking at products which can be backwardly integrated with some technology tie-ups also. So there is a clear plan now. So we see improvement in this.
So are you looking for the in-house compressor manufacturing sort of things?
All parts. We are not limiting to compressor only, but we are working on backward integration of all key aggregates which we currently buy out from either China or from any other supplier. So to make this segment relevant for our business model, it is important for going for backward integration.
But there's a need of the huge capex for that. So are you looking for some JV partners or something?
Not JV partner. We'll look for either developing such product with our internal R&D capability, or for looking for some technology which is available outside. It is at a feasibility. We have not frozen on the capex and the investment opportunities as of now. It is at the feasibility stage.
Okay, sir. And sir, how much capex you have done till date in 9 months FY22, and what is your target for FY22 capex?
So this time I think we have done roughly 70 crores of capex so far, And this year we'll be closing roughly around 90 crore of capex investment. And the similar target between 70 to 90 crore would be there in the next year also, due to our now capacity expansion plan and also for the new products which are in line as of now.
Okay. And my last question is related with the tax rate that is continued to be the high. So just wanted to know what would be the effective tax rate for FY22 and FY23?
Hemant, are you there? You can answer.
So by the financial year 23-24, it will remain 34%, the peak rate. And after 24, we will adopt the tax rate of 22% after getting adjustment of our accumulation of MAT credit.
Okay. Thanks, sir. That's all from my side.
So from cash flow perspective, the tax rate will be 16%. But from P&L perspective, it will be 35%.
Okay, sir. Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. Next question comes from Shyam Sundar from Sundaram Mutual Fund. Please go ahead.
Yeah. Hi, sir. Good morning. This is Shyam from Sundaram Mutual. Thanks for taking my question, sir. So my first question is, from an adjacency perspective, last quarter you alluded to developing some tractor radiators. Just wanted to understand that this can be a good large market as well. Even Mahindra themselves, they do 3.5 lakh tractors, give or take a little bit here and there. So what is the size of opportunity we are looking at? Then is this also a very model dependent kind of a product?
Yes. So I'll answer this question into 3 parts. First of all, this tractor radiator, which is developed by our in-house R&D, is currently being developed for the new JV alliance, that is Mahindra and Mitsubishi tractor, which will be sold in India and also exported back to Japan and also to the US market. So that is where this project is tied up now with Mahindra. So total size of the current business order which we have is between 25 crores to 40 crores. This will be the range in next 5 years. It will grow up. Second, answering your question, yes, tractor radiator is also not a generic commodity. It is by model development. And now post our successful development of this K2, which is still under development and SOP will be maybe in January 23 or so. We are now extending our product profile to other customers as well, who are quite prominent player in tractor market. Overall size of tractor market is very high because every tractor requires a radiator. So that's why we are looking at this as a significant product profile in our kitty. Hope I could answer your question, Sundar.
Mr. Sundar, are you done with the question?
I think we lost his connection.
Since there is no response, I'm moving on to the next question, sir. We are having a follow-up question from Abhishek Jain from Dolat Capital.
Thanks for opportunity again. Sir, can you throw some light on the new business you won in the last couple of months, especially for the Maruti, Suzuki and Tata Motors?
So for the new business, I'll not be able to spell out the model specifically because this is under confidentiality as of now, but I can only mention that the new business which we have tied up till maybe 24-25, roughly the amount is roughly around 550 crore or so, Out of this, there are around 250 crore as a replacement business where we are already supplying, and there will be will be launched and we will be present in that model. And 300 crore roughly is the delta business where we don't have the scope as of now, but we will have new products coming in from the new business. It is cumulative for all customers who are associated with us.
And are you also supplying to the SUV 700?
Yes, we are.
So you are supplying a compressor or HVAC?
We are supplying HVAC and hose and pipe for this segment.
Okay, sir. And sir, in PV passenger vehicle AC segment, what is the current inflation rate? I mean to say that what is the quantum of the price increase versus the last year?
So price increase because of the commodities, and so I think it would be roughly 4%. 4.5% is the price escalation which has happened if you compare prices of March 21 versus December 21.
And what would be the average realization for this in passenger vehicle AC segment, including the HVAC and compressor?
So overall, I think it would be roughly 10 to 11,000 per vehicle is the average realization in PV segment itself.
And what about the CVs and the bus segment?
So in CV, a combination of blower and AC will be on average out of 9,000 to 9,500. And bus aircon with the small bus, with the medium size bus and large size bus will be roughly 1,40,000 or 1,30,000 in that range.
Okay, sir. And sir, can you please provide a revenue breakup for the last 9 month passenger vehicle aircon, radiator, CVs and home AC?
So 9 months, if you take on the PV side, we have roughly 1,200 crore is coming from passenger vehicle aircon products, and roughly 190 crore coming from engine cooling module, and the rest is coming from all CV and home aircon. Home aircon, as I mentioned, around 66 crore, and rest would be from bus, truck, rail, tractor and reefer.
Okay, sir. Thanks, sir. That's all from me.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. Next question comes from Bibhishan from Canara Mutual Fund. Please go ahead.
Yeah, hi sir. So you mentioned that your product is still under development for EV bus segment. Just wanted to understand who's currently supplying these products.
Right now, these products are either imported or coming from carrier, or there are few Chinese players who are right now supplying this product, but it is very early stage because, as I mentioned, that still specifications are not finalized for the long term because it has to be customized for Indian environment. So right now, most of the EV vehicles which are on road, either in PV or in CV, they have some carryover product range coming in from any other country. So it is not tuned for the localized environment. So that's why we are taking a pause right now. First, the specification would be settled so that our investment don't go waste on that.
And so what is our current market share in Maruti, by the way? I mean, wallet share?
In Maruti's business, we are currently roughly 74-75% of Maruti's thermal business is with us.
That's on revenue basis, right?
On revenue basis.
Okay. And I think I missed that number. If it is possible, can you just tell me what was the CV revenue on a YTD basis? CV, bus or railways?
I spelled out before also. It, as I mentioned, 190 crore is the ECM and roughly around 1200 crore is from the PV, so it is 1390, and 1565 is our total turnover. So the difference of around 270 crore is coming from this other segment.
Okay. Thanks, sir.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. We have a question from Sriram from Sundaram Mutual Fund. Please go ahead.
Yeah. Hi, sir. Good morning. Sorry, I got dropped last time. Hope I'm audible now.
Yes, you are.
Okay. Sir, last quarter you spoke about tractor radiator supplies for M&M. Broadly, what is the opportunity size here, sir? And the reason I'm asking is it is also fairly big market. Of course, not as big as the car market per se, but nevertheless, what will be the radiator content for us per se in a tractor?
I think you missed out my answer completely, or you heard something initially.
Oh, you answered this, sir. Okay, no, I missed out completely. My apologies.
Oh, I see. No problem. So as I mentioned before, I'll just repeat it for the benefit. This K2 tractor, which we got a business from alliance of Mahindra and Mitsubishi. This tractor will be for India market, also export back to Japan, and also export to US. So we got a secure business for all these three areas. So the size will be starting with around 24 crore, ranging up to 40 crore in next 5 years' time. That's how the projections are. Second thing,
your conference is no longer being recorded.
Hello?
Your conference is being recorded.
I'm sorry, sir. Please go ahead.
So, in addition to that, you asked about whether it is model dependent. Yes, all radiators are aligned to engine and model. So that's how the heat exchanger normally work, and it has to be aligned to the model and application. So that is answering 2. 3, the size of this opportunity is large because each tractor requires a radiator. So opportunity is very high, and normally tractor radiator range between 900 rupees, starting from 900 rupees going up to 2200 rupees based on the configuration. So that's the opportunity. Now, after having successful development of K2 Mahindra, we are now working with other key strategic players in tractor market, and based on our product development and their need for localization of these radiator, we will progress further.
Sure, sir. Sir, and is this segment, is this a double-digit margin segment, or is the margins in tractors generally lower? Because we had not done this before. Just trying to understand, is there any reason why we had not done it earlier? Is it because of lower margin, and now since we have capacity, so we are trying to utilize our capacity here? How?
So there is no major differential on the margin side for heat exchanger. Radiator definitely is very competitive market because it's not very organized market. There are players who are very small base, and there are players who are very having large base, but it's not very bad. It's reasonably good. The reason why we started late, because as you know that we entered into passenger vehicle radiator also in 2015. After we got the investment production contract with Denso, and after that technology got transferred to us. So our experience on radiator development started very late, and after successful entering into passenger vehicle, then we started working on commercial side. And to start with on commercial side, we started with off-road to start with. That is on tractor. And then as a long-term roadmap, we want to cover all CV segments for radiator business. So that's how the long-term strategy is.
Understood, sir. This was very helpful. Sir, and one other question I had asked on the Tata Motors PV side, any roadmap to gain share of increase share of business there, sir?
Yes, we are working with Tata now for their future models which are coming in, and because Tata is very aggressive now in terms of EV roadmap and also to upgrade their existing vehicles as well. So we are working closely with them for finding suitable technologies for that range of product. Still at a very initial stage of technical sign-up first of all, and then we will move to the commercial negotiation. So please wait for another maybe 2 quarters to get a very fruitful solution on that.
Sure, sir. Thank you. Sir, and one last question. This margin drop that, I mean, the gross margin dip that we have seen, that is primarily because of the home AC segment that you spoke about, where the contracts are little inflexible, which is now changing, or even on the OEM side also we are facing under recoveries per se, sir?
No, as I mentioned in the initial part, only 2.8%, which is the impact of only metal sales ratio, and that is the almost impact on the margins also. So majorly the impact is on 3 parts. One is the quarter lag impact. Definitely each quarter the commodity prices are increasing significantly, so the recovery is not happening in the quarter. So only the recoveries of the previous quarter, and the current quarter is still exposed to the financials. That is one. Number 2, the logistic cost increases are significant, and which is not part of our regular compensation. This time we have started now asking customer for addition of logistic cost increase also, which is under settlement. So almost 20-30% we have already recovered. 70% are at the final stage of our negotiation. And third, of course, the RCCP business has some challenges, but it is easing out now. As I mentioned that we started now a formula with the OEM for settlement of commodity fluctuation every month. So that will help in recovery fast, but it is a cumulative impact, but it will take another maybe 2 quarters to settle down.
Understood, sir. Thank you very much. I'll fall back in the queue. Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. So there are no further questions. Now I hand over the floor to the management for the closing comments.
So thank you very much for your participation today. So as I mentioned, things are now getting back into the shape, and probably fourth quarter we'll see some positive side of the recovery, and also the next year projections are also looking very promising as of now with the current situation. So we see a good start now, or recoveries now, and we are very optimistic now that things will be in shape going forward. Thank you very much. Thanks for your participation.
Thank you, sir. Ladies and gentlemen, on behalf of Aditya Birla Money, this concludes the conference call for today. Thank you for your participation, and you may disconnect your lines now. Thank you and good day.